Now we'll start ledgers. First of all, we have to prepare revaluation account. You know it well, a revaluation account is a nominal account. Whenever we debit a revaluation account, it means we are creating loss, and whenever we credit revaluation account, it means we place any amount on credit side. It means we are creating gain in the firm. So first of all, the journal entry was building account debit to revaluation account. If we do the ledger posting on credit side, we'll write down buy building rupees 8,000, and then on the basis of revaluation to furniture, we'll write down on debit side to furniture rupees 2,000. So the total on both sides should be 8,000, and the gap on the debit side is rupees 6,000. Naturally, it's a gain. So it will be transferred to A and B in the old ratio. Be careful. The revaluation profit or loss is always transferred to old partners in the old ratio. So to A's capital to B's capital, the amounts will be 3,600, 2,400. You can write down in inner column, that is, and in the outer column it will be rupees 6,000. So because when we were passing journal entries, we had left the space for one journal entry for the profit or loss. Now we have found it, so we have to pass the journal entry in that space, and the journal entry will be revaluation account debit to A's capital to B's capital, and the amounts will be 6,000, 3,600, 2,400. And after that, we have to prepare capital accounts for A, B, C. The best way is you should prepare the capital accounts in columnar form. You should prepare 3 columns on debit side and 3 columns on credit side. I am to say for A, B and C. So first of all, we'll write down buy balance BD. These are the opening balances, 30,000 and 30,000. We have taken these figures from the last balance sheet of A and B, because in that balance sheet the capitals were 30 and 30. And first of all, we distributed accumulated profit if you look at the journal entry. So buy reserve fund 6,000 and 4,000. Then accumulated loss on debit side, to profit and loss count, 3,000 and 2,000. Then revaluation account profit. So buy revaluation account, and in the inner column you should write down profit. That will be 3,600, 2,400, because this profit was only for A and B. Then the new partner came. So buy cash 25,000 in C's column on credit side. Then the 5,000 were transferred to A and B. So on credit side, buy C's capital. In the inner column, please write down goodwill and 3,000 and 2,000 for A and B. Because C has been debited by rupees 5,000, so we'll write down on debit side to A's capital to B's capital for goodwill, 3,000 and 2,000 rupees in the column of C. Then this money was withdrawn by the old partners, drawings. So to cash account on the debit side, 3,000 and 2,000 rupees in the column of A and B. Now the total on the credit side, that is 42,600, 38,400 and 25,000 rupees. So to balance CD, this is the balancing figure, 36,600, 34,400 and 20,000 rupees. Now we have to prepare cash account. To balance BD, 15,000 means opening balance. This figure has been taken from the last balance sheet. If you look at the balance sheet, the cash was 15,000. So this will become the opening balance for our cash account. Then to C's capital 25,000. This is the receipt for the firm. On debit side we are going to write down receipts, and on credit side we write down payments. Then the money was taken by A and B, 3,000 and 2,000. So on credit side of cash account, by A's capital, by B's capital, that will be 3,000 rupees, 2,000 rupees, and by balance CD 35,000 rupees. So now closing balance is 35,000 rupees. Now prepare the balance sheet of A, B, C. Building. Previously it was 40, now it is 48. Cash. Previously it was 15,000, now it is 35,000. Furniture 18,000. Previously it was 20,000 because it has been reduced by 2,000. Be careful, there is accumulated loss of rupees 5,000 that has been distributed, I mean to say that has been transferred to capital account, so it's no more. Now the total is 1,01,000. Now please come on the liability side. Capitals. A's capital 36,600, B's capital 34,400, C's capital 20,000 rupees, and the reserve fund of rupees 10,000 that has been transferred to capital account, so it's no more. Now creditors rupees 10,000 as it is. The total is 1,01,000. So it means our question is all right.